Morning.
Good morning.
Today is 25th of October 2024. Another Get Connected sessions. Today we're going to cover tax budget 2025 part 2. Okay, in part 1 we talk about
Individual
tax impact on individuals and payroll. Now on second part we're going to touch something about on corporate, Seni Berhad or Berhad. We're going to talk about tax incentive, we're going to talk about indirect tax and some other matters. So for those who haven't watched the first part one, you can you can see our YouTube videos, things like that. Okay, so before we proceed, let me introduce myself. My name is Mr. KTP. I'm Group Principal of KTP. We have our office in Johor Bahru. With me is Ms. Lim. Okay, she is our head of customer care. So without any due delay, we shall proceed on tax budget 2025 part 2. Let's talk about company 1. Okay, company 1, there's some updates. I think key issue is like childcare, FWA, flexible working arrangement, care relief,
returning from women returning
okay,
from work.
and then some tax deduction on ICT for e-invoicing. Okay, so we will talk about bit by bit, one by one. First, we talk about childcare. Okay, Ms.
So childcare, this is actually a deductions. Means any childcare allowance paid out by the employer, they extended the scopes from the childcare to include elderly. As we mentioned earlier, because now Malaysian population is the aging group is getting bigger and bigger, so now they extended this scope to the elderly, which including the parents or the grandparents of the taxpayer.
I think in the first part of our tax budget 2025, we talk about childcare allowance. It has been extended to, don't mislead by the childcare. Right? Now it's extended to elderly, like your parents and grandparents. Okay, so likewise, at company levels, our government say encourage taxpayer employer to provide allowance
to employee on the childcare.
Okay, so this thing will effect from 2025.
Yes.
Okay, next.
Next, there's 3 elements is regarding the employers implementing the flexible working arrangement. In short, we call it FWA, and also the care leave, and also the hiring woman returning to work. So for the FWA, for flexible working arrangement, in this budget it's announced that additional 50% deduction granted to the companies, and is applicable to the cost for capacity developments and software acquisitions, and it capped up to a limit of 500,000 and is one-off basis. And these deductions must be officially acknowledged by the Talent Corporation Malaysia Berhad, and the application date shall be received by Talent Corp in between from 1st January 2025 to 31st December 2027.
I think flexible working arrangement, in short, we call it FWA. This thing come up during our pandemic, during the MCOs, whereby we cannot work as usual. Basically, we need to work at home, things like that. So I think also nowadays the working generation, especially the millennials, okay, the youngsters, they want work-life balance, and they will consider
flexible working hours.
They will take this as one considerations. So our government understand it. I think they come out some wonderful deductions, things like that. So anything expenses you incur, you have 50% tax deductions. Okay, and then you can get It's applicable to the softwares or something like that, incidental to implementing FWA.
Yes.
Okay, so I think, okay, definitely there's a term and condition apply. So this thing had to go through talent corp. Okay, within the period of 25 to 27. Okay, so for employee really think of implementing FWA, it is time to look at this we call tax deductions. Okay. Okay. Next.
Next category is the employer providing the care leave. It's also a deduction, also 50% additional deduction given. And this is applicable to you give additional pay leave up to a period of 12 months for employees who really need to take care of their sick or disabled children or family members. And also the same, you have to apply with Talent Corporation Malaysia Berhad from the period exactly like FWA from 1st January 2025 to 31st December 2027.
Okay, so 50% additional deductions. Okay, so last FWA is 50% additional deduction. Care leave is 50% additional tax deductions. Okay, our next one is
Hiring a woman returning to work, same as FWA and care leave, is also 50% additional deduction. This is applicable to any employment expenses in hiring the woman returning to work for a period of 12 months. Also required to apply with Talent Corporation Malaysia Berhad for the duration of 2025 to 2027.
so you can see basically all these approving authority is Talent Corp. All this is 50% additional tax deductions.
From 2025 until 2027.
Okay, so I repeat, if you want to implement FWA, think about it. If you are caring employer, we want to provide extra care leave to your employee, please consider it. You consider hiring women returning to work, please consider it. Okay, I think the last thing, everyone knows e-invoicing is running. Okay, there's 3 tiers. I think the first tier started
August
for
2024.
for first bachelor.
Yes.
Okay, basically it will cover some big company or multinational company. The second tier will come in soon on the 1st of
January 2025.
2025. The last batch will start
1st July 2025.
So our government understand definitely they will cost incur expanded on the implementation of e-invoice. So our government is very generous. It's allowed.
The accelerated capital allowance granted. This ACA, accelerated capital allowance, is granted previously. It's just that this budget, they announced any purchasing of ICT equipments, computer software, including the consultation fee. They shortened the period from previously 3 years, now they shorten it to 2 years. And then definitely when the period is shortened, the allowance rate will change, meaning initial allowance is now at 20% and the annual allowance is now at 40%. And this is effective from YA 2024 to YA 2025.
So, summarize in short, basically anything related to e-invoice on software package or things like that, you can get tax deductions. We call it, sorry, we have to use the jargon term. In jargon term, we call it accelerated tax allowance. Okay? So, accelerated capital allowance is shorter from 3 years to 2 years. Okay? Meaning, if you buy this $10,000, the first year you can get
20 plus 40
okay.
deduction allowance rate.
So basically, in 2 years' time, you can get full tax deduction already, rather than normal tax allowance, capital allowance. Okay, I think with this, I think company level is nothing much, huh? So shall we move to tax incentive?
Yes.
I think Malaysia, I think tax incentive cover two. I think the main is two. One is integrated logistic companies, ILC,
ILS.
integrated logistics service, whereby basically we did apply this incentive before for our client. Basically, it's like you're in the logistic company, you do the upstream and the downstream, you can enjoy this tax incentive. Okay, I think now they expanded the scope, right? And then they changed the name to Smart Logistic Companies. Complex.
Complex.
Smart Logistic Complex, XLC. Okay, so Ms. Lim.
Yeah, because now the era is all about AI, artificial intelligence. So in this budget, they expanded the scope from SLC to, from ILS to SLC. So this is to enhance the efficiencies of the supply chain by adopting more advanced technology in logistic activity. So this inclusive the automations that integrate the industry 4.0, and it comprises the artificial intelligence, the Internet of Things, in short we call it IoT, and also the blockchains. So mostly people will say, hey, what is the incentive granted? Basically, it's covered under the investment tax allowance, ITA. Previously we have run a Get Connected session talking about the tax incentive. As usual, ITA is covered 60% of the qualifying capital expenditure. In short, we call it CapEx. And then this granted for a period of 5 years. Then first layer of CapEx, when you utilize, it allows you the 70% deductions on the statutory income for each year of assessment. Then there's 5 conditions cover to be fulfilled for eligible on this SLC. Number 1 is that you must be eligible SLC companies. So it breaks into 2. One is the investor, and the second one is the operator, which you invest in constructing the smart warehouse and conducting the qualified logistic service. Or the second category is the SLC operator. You lease the smart warehouse for a long-term period, at least minimum 10 years, to conduct this qualified logistic service. So this is conditions number 1. For the condition number 2 is you must be the qualified logistic services in four terms: regional distributor center. Second one is the integrated logistic service. Storage. Third one is the storage of hazardous goods, or at least you are the cold chain logistics. Followed by the third conditions is your warehouse. There's a requirement on the warehouse size, where the warehouse size must be at least 30,000 square meters. And the fourth conditions, as I mentioned just now, you must at least adopt 3 elements of the industry 4.0. And the last one, they make the reservations, any other conditions that are specific. So this is the 5 conditions to be fulfilled.
So I think, let's summarize it. If you are involved in logistic company and you are big, meaning basically you cover upstream and downstream, okay? It will say that it will talk about whether you are regional distribution center, or it can be regional logistic, or it can be storage of dangerous goods, it can be cold chain logistic. maybe you can, it is time to consider this tax incentive. Okay? No, approving authority is MIDA. The tax incentive is like, it gives you an investment because tax allowance, because all these players, they involve huge investment in infrastructures, plants, lorry, trucks, things like that. So it gives you a special incentive. It's about 5 years. Okay, so please check with MIDAS or check with your logistic companies, association, all this. Of course, you can check with us if you are eligible or not. Okay, so next is
Exports.
export allowance, right?
Yes. So from exports allowance, they want to increase the export, so they expanded the scopes to included the integrated circuit. In short, we call it IC design services. This is just an alignment on the new industrial master plan and IMP master plan to make Malaysia as the hubs of advanced integrated circuit design. So this is effective from YA 2025.
That's nothing more. I think it's more on IC. It's IC design. Okay. So we cover company. We cover tax incentive. I think now we move to indirect tax.
Correct.
Indirect tax, normally we cover sales and service tax and others, excise duties, import duties, something like that. Okay. So what's the main changes on SST, Ms. Lim?
Two parts. The first one is on the sales tax. So the sales tax, the exemption it still remains for the basic food item. In addition to that, they increase the rate for non-essentials item, which means the premiums imported goods like salmon and avocado.
Which make a lot of hoo-ha in the press. I think, why salmons? Why avocado? Right?
Then second part is the service tax. It's expanded the scope to a new services. For example, business to business. In short, we call it B2B, commercial transactions. So all this is effective. This too is effective from 1st May 2025.
I think service tax is always imposed on some players, right? Some industry. So our government is trying to expand the scope. So the new player, new industry will come in is to B2B, which is quite a big impact, I would say so. So next is we talk about this one, Coca-Cola, sugar drinks, thing like that. Okay.
Yes.
So I think the Malaysian government try to
Sugar war.
try to fight on sugar wars, nothing like that, because our population, especially the younger generation, is getting more and more fat, right? So they don't exercise, they play handphones, and then they drink a lot of
Carbonated drinks.
they drink a lot of coke, they drink a lot of milk tea, things like that. So government says that we have to do something lah, So they're going to increase the what you call
The excise duty rate on the sugary beverage.
So next time our milk tea will become more expensive. So next time Coca-Cola will become more expensive. Teh tarik will become more expensive in Mama. Okay. So I think this is a good move lah. Okay.
Next will be a new one is the carbon tax. In this budget they introduced a carbon tax which imposed on iron, steels and energies industry. This one is effective by the year 2026.
Okay. I think this is a new one. I think this carbon tax will affect a few industry. I think iron, steel and energy. Let's see how it goes because it started in 2026. I think it's still sometimes Let's wait for the news to come out We don't guess anything Lastly, I think more or less we'll cover the final part. Okay, the final part is deal with other things lah. Okay, I think the first one is after the budget make a lot of hoo-ha one is the subsidy for Roy 95. So am I in T20? It's still there are a lot of debates lah. So we're still waiting for the announcement to come out lah.
Yes.
So the main question is, am I T20 or how to judge people, taxpayer T20? Let's see. Okay. So the second thing is levy lah. I think Malaysia is depend on foreign workers. So they have been talking for years lah. Malaysia tried to reduce foreign worker. That's why Malaysian government tried to implement the digitalizations. Then Malaysia tried to implement EPF for foreign workers, all these things. So they will come out multi-layers levies. The major impact is all the big players. All the SME will employ foreign workers, right?
Yeah.
And then the last one is closest to us. I think we know forest cities. I think last month our government come out forest city tax economy.
Financial special zone.
Yes, basically it gives you 20 years tax exemptions. Of course, term and condition will be applied to family business. Okay? Family trust business, things like that. So now they expanded, they call new terms like Johor Singapore Special Economic Zones. This one akan datang. We have no clues, so stay tuned. Okay? We will update you once the news come up. Okay? With this, I cover more or less. I think we cover more or less already the tax budget. Thank you for your times. And then, Majulah Malaysia. Thank you very much.
Thank you very much.
See you.